Hi everyone. On Monday, the 18th of May, 2026, we hosted the Afribond Forum at the House of Commons. It was a great day for the conversations aimed at showcasing investment opportunities across Africa. And in this event, we had the Fireside Chat featuring Surayyah Ahmad of Sabou Capital, Gbolade Okeowo of Kuramo Capital Management, and Sidi Saccoh from Sidi & Co. Here they discuss the need for pension funds in Africa to invest in more alternative asset classes, investor appetite across the region, and the work of the African Development Bank's Youth Entrepreneur Investment Bank. We hope you enjoy and visit Afribond for more conversations, including our new show, the Afribond Roundtable.
Hey everyone, can you hear me?
Here. Hi. A round of applause.
I personally learned a lot, but before we drop into proposition, I will, pause for one of my guests to do a brief introduction. Right? And then we'll come on.
Thank you very much, and thank you for Afribond for having us. And Surayyah,
we're done. My name is Gbolade Okeowo. I work with Kuramo Capital. I lead fund of funds investments into SME tech creative funds.
So Surayyah is like a poster child of the types of funds that we like to back.
And the other fund managers here as well that we're trying to back. So what we do essentially is that we chaperone capital from the West and into Africa. We're into our fourth fund now.
And the first three funds we invested put our AUM at just under $500 million USD. That with our fourth fund, we're getting closer to $1 billion USD. We have offices in Lagos, where I'm based, Nairobi, and our head office is in New York, because most of our investors are US-based, they're down funds. But more recently, as Surayyah said, we started finding opportunities to unlock capital from little pension funds. And there are also other parts of capital that are already grown on the continent. And so I'll leave it there. But I have a dual met of the ecosystem as a capital allocator into direct investments and also into fund of funds. So rather than me just relying on my own pipeline, I also rely on pipeline of managers like Sabou, for example, where we can invest alongside them on the year.
Alright. Unless so should we need to reintroduce yourself?
I'll just join into proposition.
Particularly so, because you mentioned that Kuramo is holding and pension, leaders in the continent, and Surayyah mentioned, and I think there's no secret for people that work within the space that capital exists within these funds and the continent. What exactly is the challenge to convince the electoral back?
Number fund managers.
I'm supposed to answer this once. So I like to start conversations like this. I don't know who is the who. I don't know who's going to help this. So we must always say the positives about this allocators. So let's start. I would say the positives, to be honest, and these allocators have quite they've been around for just a finite number of years. The Pension Reform Act in Nigeria and really unlocked hope, then what has led to $30 billion of pension in Nigeria is less than 25 years. So first and foremost, let's give a break. The fact that there are already a pool of capital that is available for the fixed income instruments is fantastic. But as we mature, the quality of problems that we're supposed to be solving in this capital, as we so show. Fortunately for us, there's also a convergence with the demographics. As Surayyah said perfectly, the age horizon of most people who have their monies with pension funds, there's at least 25 to 30 years. And so there's already an availability of capital that extends by the day. As long as salaries are paid, pension pots continue to get bigger. So we now have availability and access. So the first thing that I think that we've done, and we should pat ourselves on the back for across the continent, is that we are now helping ourselves understand better the risks inherent in alternative asset class. And you can see even the regulators have started to increase the structural allocation to alternatives from 5 to 10, and in some countries 50, some other countries 20. So it means already that the amount of money that they can put into the fixed income space now has to be legit to other allocators like us in the alternative space, which includes private equity, venture capital, and real estate. So now that I've painted that context, trying to answer your question, what have been structural problems? Firstly, that allocation of only 5% statutory in Nigeria, that it's actually less than that has been allocated. Or now is pressure on men to increase that from 5 to 10. So automatically you then have 10% of $30 billion that's available for the pot of capital. But there are other more technical terms. For example, if I'm trying to chase a Nigerian pension fund to be an LP in my fund, they would never be the Alcohol. So all of a sudden, I'm still looking at the BIS. I'm still looking at the ISs on MasterCards. So what can we do to help them stomach that risk to be able to take an anchor position in my fund? But if we look at it, they are allocators of capital and they are used to the sweet returns that they're getting from fixed income that is almost guaranteed 20% per annum. There's two issues with that, one a positive and one a negative. The positive is that it's risk-free. You would get that 20%. So your pension is guaranteed in a way. But the real return on that is that in 2024 and 2025, inflation rate in Nigeria was 34%. So really, you're making 14% total. The only way that they can start to adjust for that deficit is to make allocations in alternative assets to spaces that have a chance of doing 10x. If you do 10x in 10 years, you're looking at an IRR of like 140%. So hopefully the winners will more than cater for the losers. So it's that inflection point that we're trying to solve for.
No, thank you for that context. Surayyah, I need to come to you just because, again, it's a banana for Dwai. So allow me to be a little bit rude to my show. So one of the things that is very pokey and so like these sessions that we had is there are always moments where the buzzword coffee. Today, the buzzword is better financing. Every conversation is basically at your level, what exactly and how does it exactly unlock the capital that people that need require to up to this skill?
Well, thanks, Sidi. Yeah, I feel like I'll be screaming because my experience is very, very dry. But you're right about buzzwords. You had many of them flying around for so long. And I think the only way I can show you how this works is by giving you a vivid example, right? And I'll go back to me because this is the one example that I am currently operationalizing, and it's been created across the continent. Now, at no point did we think, let's create a bank for young people, right? Young people are considered a risky assets because before the age of 35, you likely to have a property. You probably have just been in Word for a couple of years, so not a lot of credit history to make you bankable. Now, when you're a young person and a woman, that is a double-edged sword. So, typically as a bank, you also have that responsibility to protect customer deposits. So you're not going to invest in very risky asset classes. And so what happened was the AFD says, you know what, let's use the government to mobilize investment into young. And in order to do that, they cut to cost the government's hands in little ways by saying, we're going to give you this amount of money as an extremely cheap rate, so lower that was sub-rate lending rate. And what you will do for us is you have to invest this money in this particular way. If you don't invest it in this way, we're going to take a money back. And so as the AFDP deployed that money into the government's projects, the government was forced to increase the management capacity which is then owned in Nigeria by a sovereign investment authority and developed by Nigeria. And now there are other investors on the table, the DFIs, the AFDs, the GICOs saying, you know, okay, I want to put 100 million as well. I want to put 25 million as well. So the $1 that AFDB has put in, because it's blended, it's allowed to take risk. So what sort of risk is it allowed to take? One is, we're saying every fund manager, so like Sabou and Launch Africa, create a pocket for you to be able to invest in young people, and it will take the first loss if you lose the evening. So that's first. So that's blended. If it's not blended, Sabou would not be able to take that risk. Launch Africa will not be able to take that risk. So blending capital allow for evidence building in short, because evidence building happens when there's data. When there's data for investors to bank on and say, oh, we've invested in this number of young people or this number of women, and we've seen that they haven't defaulted. And I think investing in women is one typical example. For the longest time, people were not deploying capital to women. But now we know that when you lend to women, you have close to 0% to non-performing. And that only happened because somebody decided to create blended structures that incentivized investment. And so it's a similar situation where we want to incentivize investing in MSMEs and startups and young people, because that is the highest earning bracket that the continent has. I want to build evidence using that so that in 5-10 years' time, nobody is going to need that concessional component in order to invest in this asset class. They built enough data to inform their decision. I hope that helps.
It does actually go. Yeah, thanks. Thank you, Shaq. So, Gbolade, I mean,
You have had multiple conversations, and you know that I'm going to advise you and my friend when goes to the as well.
Southern is a very something that is keeping me up at night. So, OP is thinking about listing Liberty Oak stock exchange.
There's a whole lot of controversy about the exits. People debate that Nigerians should be allowed to take part in the company because the company became successful.
At the back of the eye here in Australia. One of the things that you mentioned, Leach, is it's part of what I've been thinking about, which is you have the pension funds. Now, regulation means that it can up how much they can contribute to alternative space. But you also particularly mentioned that even at that level, anchor investment have to come from elsewhere. So it seems like we are caught in this conundrum where African elites is first have to be proven by external players, almost as if the capital in the continent have not been curated to take the first bets in the risk opportunities that are available in the continent.
And the truth is, you and I know this, the first mistaker always have the larger job when it happens. How can we fix that?
Great question. I think the question says around the you know, it's the solution to that is going to be different in every market. So the appetites, and it's also different in every industry. So the appetites for the allocators of capital in Nigeria to back Nollywood is different from the appetite of investors in Ethiopia to back their movie industry. It's all relative and it's all different. But as you said, the person who takes a first bet usually gets the biggest chocolate pie. Now with OPay, controversial example because you can look at it in two ways. The fact that they're listing in Brazil doesn't preclude Nigerian investors from participating. Those Nigerian investors just have to meet the requirements to be able to participate in the New York Stock Exchange. Or usually the minimal entry requirements are pretty large, and so they'd have to pull a number of investors together to be able to get slice of that pie. So for me, that question nobody's precluding Nigerian African investors from participating in New York Stock Exchange. The fact that OPE shows New York Stock Exchange, there are a lot of considerations that are beyond both of our pay grade. There's a lot of diplomatic considerations in that as well. And just as a bit I don't think it's an intentional or deliberate preclusion of Africans from the opportunity. So I'll leave that. But I still agree with you that structurally, we need to be able to ask ourselves questions like, why couldn't we take the first bets? There's one scenario that you was preview that happened previous. So everybody heard about the Rema Arya Star Maven deal that's that valued business at north of $150 million when the Universal Music got into it. The people who took the risk in Don Jazz at a $20 million valuation were American. So they got a chunk of that upside. If Africans took that risk, they would have gotten a chunk of that upside. But unfortunately, that's how it is. So the question I then have, for myself as a stakeholder in this ecosystem is, what can we do to make it easier for us local investors to take a bet in local opportunities? And the answer is in basically taking the trust deficit. How do you build that trust deficit? It starts for the top, but you and I, as she said, but all the ingredients get put. So if the Maggi is spicy with the pepper, the stew is going to be funny. So we need to start to trust ourselves across borders. And I think the onus is on you, the creator of the opportunity, to see how you can solve that trust, however you can solve for trust. And one of the easiest ways to solve for trust is by just documenting what they do. Just processes, reports is one of the easiest ways to solve for trust. So the more we continue to build that into the way we do business, I think things will start to turn around. It wouldn't be a valuable 360, but every job, every airport counts. And
Rounding up with us out back to Brit,
I'm ready into conversation. Surayyah, it's something you mentioned which is critical, is the trust layer. Whether you're invested in a founder or you're raising capital, you have to establish trust, not only in bulk pieces, but your perspective of the continent helped by a decision. For example, you've been a very bold decision that you will be able to focus on or prioritize the best thing in payment businesses. Right. At the time, when was it after? How did you manage to be specific procurement?
That's a very good question. But I think rather than talking about trust, I would talk about creating outwork structures. I think for the longest time, we've relied on what we see happening outside the continent in the developed countries, and we've copied up these set structures. And so, for example, I'd always made mid-30s. Typically, you start a $30 million fund in the UK. People are paying the bombalistic side eye, the Thai blood, KVK, West Musket. They would give you that type of eye, and they would say, but if you don't have 30 years of experience in private equity or investment banking, why starting a fund? Who is going to give you money? Nobody's going to invest in it. I mean, you could get very lucky, but a lot of people will not invest in it. But that's because in this part of the world, so it because I saw that's because in this part of the world you have those structures that have been there for 5 to 10 years, right? For a century or more. And so it builds that experience thick. And so when it comes to Africa, you need to look at trust in different area from a different point of view. The entrepreneurs that you're trying to invest in, it probably not in that industry existing for more than 10 or 10 years. the fund managers that I try to recently have not had the robust financial industry to build experience in. And that is why you see a lot of our fund managers are orange trade investment bankers, your Wall Street, that are decided to cut back continue to start some. So the question is, where do we start to build a trust local talent? Because the local talent is the talent that will build the continent. The vast majority of what we have today are local people that have never left the shores of Africa. Or at least Nigeria, so the most what I can talk about, I feel. Africa is one massive 3,000 languages. So we need to look at trust from a different layer. The way that I would assess a founder that has studied in Nigeria, that has local market expertise, that understands how to trade and sell in Nigeria is different from the way that you can be founder in the UK. A typical example is Moneypoint and Revolut. So I've had this argument with an investor, Sidi, one of the LPs that came for our DDVJAX, and she said, I don't know why you're doing fintech, because fintech is very different from the other sectors that you have. And this is a real life example. It was 2 weeks ago, the Lagos. She said it's very different from the other sectors that you have. It is deeply technical. You have to have a technological expert that can do technical DD. So the fintech here is different. I took her to Okeowo markets in Lagos, and I showed her the number of POS agents we have. Fintech here are people that are physically seated, right, in different areas, collecting deposits from people, giving them cash, and lending to them from their umbrellas. It's not people logging into Revolut and Muziba. And that is why at Moneypoint today at Go, you have hundreds of thousands of agents. So if you're investing in them and you're assessing them the way you're assessing also an Iraqi, which you would never invest in them as a kid. Because the technology layer that you're looking at has the most important thing is an enabler. A lot of the work happens manually and it happens in the backend. So I think for me, as against dual trust, I will say understand local context because the expertise is different across different markets. Do not undermine market expertise. Do not undermine what that they need to do in their own local communities. And I think the moment we start to focus on those types of opportunities, that is the moment that we start to on mass market consumer-facing businesses.
All right, let's do some buses.
Yeah, I'll never mind going now. I'll say nothing, so no, I'm rushing.
Let's be let's go.
Thank you to Sidi, Surayyah, Ahmad. I think everything that you spoke about is it could have been insightful and a very important conversation. It's very interesting in managing it used, Surayyah, not feared, because I think all the companies that would make a great yield are great, but if at the foundation of that lane, the food is rotten, how do we get to the end? And it's very interesting on a daily is about trust, because for some of these youth enterprises, some of us are leading by example, unfortunately. And I think it's a much deeper conversation. We can go too deep into it. The question I have then is, what are some of the attributes that somebody with a youth enterprise, somebody trying to look for investment, they need to portray? And as a double-ended question, what kind of youth enterprise would you think some of these investors and venture capitalists would be the key to invest in?
Let's catch you there. I was hoping you wouldn't get into government quick sites of what's in But yeah, I'd say, first of all, don't look at yourself as a young person. I always tell myself that if you think Clayton is young, who was Prime Minister of Netherlands a couple of years ago, I think she was at mid-30s. And I think if people can be presidents and prime ministers at whatever in their 20s or 30s, and I see your reason why we should look at ourselves as an exception. So as a young person, you have as much agency as everybody else. Experience is accumulation of learnings and knowledge. Is an accumulation of learnings and knowledge over time. And I think the faster you're able to build that knowledge base very quickly as a young person, the easier it will be for you to do something great. So as far as I'm concerned, it's just youth is something that people like to talk about, but really, young people can be great businesses that are veteran people that have spent 20, 30 years KSF. So the first mindset to have is, I can do anything and not have 30 years experience in this industry, ship or stock exchange. In fact, it should be a gabler because you haven't perhaps learned about the bad behaviors that would make you not do it the right way. So that's where, in terms of the type of businesses, I would say it's also generic. It's what I tell in your founders as well. Being a woman does not make you special, unfortunately. Being a young person does not make you special. At the end of the day, you still have to build a great business. You still have to build something that investors want to back. And you still have to build something that makes sense and take demand. So I think what I'm saying is you still have to go back to the basics, right? Building something that somebody needs or millions of people. And if you can do that, being a young person just becomes an additional advantage where institutions are really created to fund people like you or to support people like you. So you would just leverage it to get even better. But the rules really apply regardless of whether you're a woman or you're a young person.
All right, I would like to get to the other side. I'll just give it to them here.
Thank you. Wow, it's music to my ears. You know, I spent a decade across the functional in Berlin Entrepreneurship program. And my first meeting was, in fact, with the Director General of the African Development Bank, convincing him to invest in marketable entrepreneurs even before he was anointed in 2015. So I was delighted when he came up. He did invest in my program and $5 million eventually 5 years later. But I knew that he was looking for a much more bigger, more structural approach to supporting African entrepreneurs and enterprises. And so I was delighted when YEIB was launched. I guess my question, 2 questions, right? One is, where is YEIB in terms of Pan-Africa? Nigeria is middle of this destination. And do you see it really impacting African entrepreneurs across the continent? And secondly, in terms of blended capital, yes, I think it's fantastic. We're still chasing pension funds. I know, having raised institutional funds here, and particularly leveraging pension funds, how challenging it is, and the cost of ultimate, it's even also, but it's good. But where there is a real opportunity is really, there's a phenomenal amount of high net worth individuals who made a lot of money. And they're not just Africans, they're Lebanese, they're Indians, they are across the continent, yeah? How are we leveraging that as part of the blended financing or investment approach? And how are we also leveraging the goal nugget, which is the diaspora, the African diaspora? What I want to say is that I watched India going through exactly some of the things that you're talking about and look at what it's really transformed its entrepreneurship and startup ecosystem and the role of the government in that. I agree with you, we shouldn't just be looking to Western models, but let's look at the beginnings of global system.
Yeah,
Thank you. We'll share the question. What again? I'll go get a bit more on YEIB, which is the Youth Entrepreneurship Investment Bank. That's where it's started by the former president of African Development Bank. So what I'd say is, it's less about YEIB and more about the vision of funding young people Pan-African. And I said that because YEIB has been launched in 4 African countries now. Nigeria, Cote d'Ivoire, Ethiopia, and Liberia. There's going to change of leadership and African Development Bank in case you guys are not be following the new president, and of course, everybody would come with a vision of how okay, what you start. But I think overall, what I'd say is there is a continuity of vision when it comes to funding young people and women on the continent, whether that has the same tag or a different tag. What is incredible to see is that this is part of the top 4 priorities for the current president of African Development Bank, Dr. Sidi. I think it's number 3 or so. And so we are hoping to see that this continues across the continent, perhaps looking different with the same intention of funding and supporting your people in UMEC.
Our leaders and questions for people at Start. Thank you.
Thank you. I think what sort of struck with me is how we could take learnings from Diaspora. And so how do we bring in the Diaspora as pool of capital that can also unlock opportunities on the continent? I think there's a plethora of learning costs from what India has done to mobilize capital into the capital markets, and even not just capital markets, but just jet. And I think something that we could take quickly to learn is the utilization of technology for reporting, and so you can be in any part of the world in the diaspora, but just by power of a login, you can see a dashboard that makes you feel confident and comfortable with what your capital was doing. But more important, you can pull it out to you to do. But that liquidity doesn't really exist in that formalized fashion on continents. And the reason is we haven't previously been solving for liquidity when going to investments. As they say, you need to keep the business 3 years to gestate, 4 years to gestate before you could start to try to pull capital out. That could be the case, but as an investor in diaspora, I want to be able to take my money out whenever I feel like it, even if it's that I take it out as a discount. And so let's say I put £100 in and I try and break it before, maybe you give me now £90, whatever it is, but I could take that on there. So those are the things that we can try and solve for with technology. There are already situations where this are happening, in real estate particularly, in Kenya, in Nairobi, in Lagos. There's a lot of use cases for real estate investment. And also, I know there's some people in the room as well who have done syndicates for investments to sort of, be a sidecar to what YC is doing. And I know that there are things already happening with mobilizing diaspora capital onto continents. I guess now we just need to take it to the next level and start to build, technology-driven platforms where I can sell to you at a discount because I need to pull my money out. I think that's where we get it. Thank you.
Thanks, Gbolade. So we'll have just 2 questions that just because we're running out of time. So on... Yeah, of course.
I'm losing the time, so I'm very big. Just on high net individuals, I think just the same analogy but advice. People are used to a certain way of investing on the continent, and here it's very easy to liquidate through secondaries. I think some high net individuals have tried their hands on equity. They've been locked for a decade plus. They have seen no way of exiting, and so capital is not being recycled, which is why we need more clients that are doing slightly other type of instruments. Because, for example, our target IRR on Sabou is almost 10%, and that is higher than you would get on most debt funds that are outside of a continent. So we need to start setting self-liquidating instruments that investors can invest in to diversify from my ETP portfolio and hence be able to get capital to recycle and invest in businesses. Right?
Okay, so Asher.
Thank you, guys. Just a quick one. I think I just want to ask a question: whether is this problem at the chicken and egg principle, which one should come first? I.e., we're all talking about like the capital that's available within the continent, and of course we can see like the pension fund of individuals about 3 trillion, China, and we've got like 1.5 billion people, as Surayyah mentioned earlier. You can see it where they mentioned that as long as they would keep getting salaries, the pension fund would increase. Do we not see this as like we need to get the continent to be more productive? That way people start getting paid and then the pension fund increases. And also like about the pension that is actually the regulators releasing for funds to be available. Again, there are statistics shows that in Africa, most of the debt that we take is actually backed by our assets. Can we not, as a way to protect these pension funds, again, we could this is where politics come into play, to say, well, we can actually back these pension funds to be released to the market and actually use our assets so that when the pension funds can have confidence now, if anything goes bad, that our assets in the continents can be used to protect those funds.
Yeah, thank you. We are aware of some sovereigns that are exploring different types of structures. There's one that we're working on currently with the government in the Middle East and Canada, Global Affairs Canada, and basically it's called the replacement income model. And what that basically means is, so let's take, for example, I am eyeing a pot of $100 million from Nigerian pension funds who typically feel comfortable making 20% per annum from fixed income. Now, so basically 20% per annum, so please follow me, 20% per annum on $100 million is $20 million. So it means that the opportunity cost for them to allocate capital to me and Sabou is that $20 million that they would typically have got if it's put it in fixed income instruments. So why can't we talk to sovereign governments to put $20 million as a guarantee first stock to give them the protection of comfort that they need? And once you do that, you can then, the Nigerian pension funds can then basically unlock up to, instead of 100, they will say 80. And so there's a margin for comfort. Those are the types of creative ways that we're thinking. And what then happens is that capital is not called, it's contingent. So it means, say for example, it was the UK government that put in that instrument, they will still earn some interest on it because I haven't called it until talked about default. And hopefully, we've also had other blended structures that would also stem in the gap before we can actually call it this ultimate guarantee. But those are the kind of creative things that we're thinking of that the AFDB can sort of back, or with different types of sovereign wealth funds can kind of back and hopefully sell it as a product to other sovereign funds. Thank you.
Just a quick one. I wanted to say what you just said now is our impact sell to pension funds and common sector investors. Invest so that we can invest in MSMEs, so that they can create jobs, so that we can get more taxes and more pension. And even if we're not making up for that 20%, if we're giving you 15%, you will make up the rest of a 5% or more in additional pension and additional taxes. So there is an impact in those states as well.
Okay, thank you. And we're just doing one last question, so we're already lowered the tires.
Let me just say a very, very big thank you to the panelists. Everybody, keep your phones out for a second and take a picture of that panel. That's a very, very informative panel. And I urge everybody to do that. Take that picture, because the only way that you can amplify your news and get people to look at it from the Western fund managers' perspectives is you posting on LinkedIn. I can't say anything more than that. And a question that I ask all the panelists is, what relationships do you want to build?
So straightforward, what relationships do you want to fix? So if you don't mind, I think we'll use that as a posing.
Yeah, let's do that as posing. Let's just take one more question and use that as posing.
Little. And then yeah, okay. Like that's it. Yeah, 30 seconds. So that's 15 seconds. 18 seconds.
Hi, sir. Quickly. Sabou Kabucha's business is amazing. I know, sir. So I think my question, context stripped aside, is how do you build support systems that make these businesses investable? Because that link still exists. That chain is still a problem. Yes, sir.
Yeah. I'll take the last question up.
Hi, I'm Prince Kamali Ademile, and first and foremost, thank you, panel, for all the information you're giving us. It's really good. I'm the founder of UK Africa Trade Expo, and what we found is, as you rightly said, before capital goes into Africa, we're looking at trust, structure, and execution. We focused a lot on the structure today, and this question is for Surayyah, because I know the SA for MSMEs in Nigeria is very passionate about capital. What you presented us today has been amazing. Now, what is the gap between the government and private enterprises like yourself that's missing? Because there seems to not be that link there. We've spoken about sovereignty, we've spoken about government, but the missing link, because I know he's very passionate, but I'm not hearing anything from his perspective on this essay for micro, small, medium enterprises in Nigeria, works with the government, like special advisor to the president. All right.
Thank you very much. I do not know the essays, so it's going to be hard for me to speak on its behalf. But
What I could definitely say is I can speak in general about where I think the government is headed, if that's okay. On project preparation or technical assistance, as we call it, so to the first question, we consider it a necessity for a something to exist. So I did bog you down with our structures, but we actually have two vehicles. One is the fund, and the second is a technical assistance vehicle, which is a non-profit vehicle, and it falls 10% of our AUM. So we raise money for, a lot of our investors are usually packaged with some money to the technical assistance vehicle as a grant, and those grants we use for pre-investment readiness for businesses, and then post-investment technical assistance, so that when other investors are looking at those businesses after we invested and then make it see as these are really businesses that we should also invest in. I think that's a question. On what the government is doing, or where the government's head is at, and I honestly think there is a lot of movement from a place where we don't really understand what these guys are doing to say we still have many into us. So now we have funds. I think you had Righteous Plan Goal that is anchored by IDICE, which is a government initiative. And this is the first time that we have a government anchoring a VC fund, right? We have the Kuramo who is also, doing a lot of stuff with the government as a fund of funds. YEB is a conduct of a government. So I would say there are at least 3 fund-of-funds initiatives in Nigeria that are currently being led by the government and other direct investment initiatives. So I think, can we do more? Yes, we can do a lot more. If you look at the government's prioritization, infrastructure as a key priority and as an enabler of NSNs themselves, we can say there's movement and we like that this movement is happening. Can we do more? I think there's always an opportunity to do more. Thank you. I will close with the partnerships, if that's okay, and then I'll hand over to Gbolade, but I'm not going to I think. But closing with the partnerships, I think I stated it on my slides there. Share deal flows. If you know a company that needs fund, please share it with us. If you've seen models that are bought in other places, share knowledge with us. If you want to co-design, co-create, you want to come down and offer something, please come and offer. We're cooking a really delicious, but we don't want it to be rotten out there. Please come and join us in that. Thank you.
They should invest. Sorry, they should invest in the fund.
Oh yeah, give us more in the case. Thank you, Blessed. The Diaspora component, don't worry, we found the SPV and everything, minimum ticket size, take fund. And then as long as it's up to $1 million, it is our minimum ticket into the fund, can invest in alcohol. Thank you.
So his question was, who do we want relationships with? So I think I want relationship with defense, like so CIA, MI6. So that, to be very honest, I would like more friends in the security intelligence network globally. But as an investor on the continent, I think that you need to see, for every one deal we say yes to, you need to say what. And so if you ever have any opportunities that you think is bakeable or is already baked, that's our job. It's to listen, no matter what it takes. So I'll send some food that I'm actually on leave at Gbolade, but this is why we're here. And so please just keep in touch. That a relationship with everyone, it means something. And if there are any opportunities that think that we can back or we can add value to by just even introducing them to somebody else, we would appreciate it. But thanks for having us. Thank you.
Yeah, well, thank you, Surayyah. You're on the thought, like, the time starts out.
Thank you, Gbolade. I think for me, one of the things that I picked today is there's different layers of complexity when we talk about finance and especially the continent. I mean, Surayyah did mention like everyone here should speak about that. I have operated with a lot of companies who were too large for my papayas, too small for venture, and 90% of your instances in the continent somehow find themselves so unique. And I think that is an important thing that I should take off. In terms of relationship that I'm looking for, I mean, Gbolade, you're looking for insider rates. Mean why you ask you all that. Yeah, I mean, I work with a lot of startups, as well, investors as well. So I'd like to have a conversation. Perhaps there's someone today in I never, as Gbolade said, as Sabou said, Surayyah from Sabou said, there is always an opportunity out there. There's always people that could believe in what you do. You have to speak up about it. That's why we're here. Thank you very much, TG. For this.
One of partner.